Hello, what's up guys, and welcome back to Crypto Guy News. And today we are going to learn about the reversal candlestick part 3, and this is the complete guide to candlesticks patterns crash course, which is also the part 3 of the total of parts of this course. So in the last episode we learned about different types of reversal candlesticks and how to interpret them. A reversal of direction of a trend happens slowly after going through different stages, which we are going to continue in this video. We are going to start with the bullish Harami pattern. It forms in the bottom of a following a downtrend being in the decline. We have a long red candle, which is actually our first pattern candle. This long red candle shows selling pressure and it indicates that the bears are in control, but the second candle opens with the gap above the first candle. So this second candle here opens with the gap above the first candle close. Now this was the close of the first candle, and this one opens with this gap here above the first candle close. The shadows must be inside the body of the first candle. The whole second candle from low to high must be inside the body of the first candle. So this one here, everything should be within the body of the first candle to make a bullish Harami pattern. The color of the second candle doesn't matter because it is small and we don't have much activity between the open and the close. So between this open here and the close here, there's no much activities going on. The smaller the body of the second candle, the stronger is the pattern. So if this body here is smaller, then the stronger is the bullish Harami pattern. This candle shows a sudden increased buying entrance, and the result is a small candle which shows a standoff among buyers and sellers. So these small candles here shows a standoff among the buyers and sellers. It's a deadlock between bulls and bears, and it shows that the trend is weakening and there is a possibility that a reversal may happen. Shows a deadlock between the bulls and the bear, and it shows that there may be a reversal, and we can see it changes the direction to uptrend from the downtrend after this bullish Harami pattern. So bearish Harami pattern is just the same as bullish Harami pattern, but in the opposite direction, and it forms in the top following an uptrend. So this one forms in the top of this one following an uptrend. The first candle is long and green, and it shows buying pressure. So whenever we see any long green candle, we see there is a high buying pressure. The next candle opens with the gap inside the body. So this is the gap inside the body of the first candle, which is the green candle, indicating a sudden increase of interest for selling. So this one was on a bullish trend, and then there was a sudden change for bearish trend here, which is a sudden increase of interest for selling. The shadows must be inside the body of the first candle. The whole second candle from high to low must be inside the body of the first candle. This one here from high to low, everything here must be inside the body of the first candle. The color of the second candle doesn't matter because it's small and we don't have much activity between the open and the close. The smaller the body of the second candle, the stronger is the pattern. So if this one is small, so there was a buying pressure, and then there is this bearish Harami pattern here. So that shows that there is a possibility of a reversal of direction. By closing this candle near the open, it shows the trend is vulnerable and the buying pressure is decreased, and it shows the indecision among the buyers and sellers. Okay, the smaller the second candle, the stronger the pattern. So we see that there was an uptrend, and then there was a indecision amongst the buyers and sellers, which shows that there is a possibility of a change in direction, which this will be now a downtrend. It can be uptrend because there is a big indecision here, which happens that this candle opens between the body of the first candle here. So we see that there is a reversal of the price. Another one is a bullish belt hold pattern. In this pattern, we have one candlestick that is an opening marubozu, and it can be both bullish or bearish pattern. If you want to check about the marubozu, what a marubozu is, check the first episode about the marubozu. That will be part 1 of this video, so just go and check that. So just watch this video and then check that part for you to understand everything from start to finish. We have a long red green candle that it doesn't have a lower shadow. So this long red green candle with no lower shadow that forms in the bottom following a decline where the price opens with a gap below the first candle close. At first this may seem very high selling pressure, but instantly higher than the selling pressure we get very high buying pressure, which doesn't even allow the bears to go lower than the open, and the bulls are very aggressively push the price up and fills the gap. So we saw that there was a selling pressure, and then the bulls took the market here. The candle goes inside the body of the previous candle. The lower the height of the belt hold candlestick, the stronger the pattern. So the lower this than this, the stronger the pattern. The clearer it shows the downtrend is weakening and there is an increased buying pressure. If the next candle is red, it means that the selling pressure is back and the continuation of a downtrend is more probable. But if it's green, it's more indicates that the bears lost the control and there is a possibility of a reversal. So if this one could be red, then it will still go down. But because of this green candlesticks, we're now seeing that there is a reversal of the trend. So this pattern can happen in combination with other candlesticks patterns to form a dual or triple patterns like bullish engulfing pattern. It becomes strong when there is a combination with other candlesticks like the bullish engulfing pattern. If you don't know about bullish engulfing patterns, check the last episode to see what a bullish engulfing pattern is. Bearish belt hold pattern. This is just the opposite of the bullish belt hold pattern that we have seen. And here the price opened with a considerable gap above the last candle. But instantly there is a very high selling pressure, which the bulls don't even get a chance to drive the price higher than the open, and the bears push the price down aggressively and fill the gap, and the price goes inside the body of the previous candle. So the bulls did not get high enough, and that's why we are getting this marubozu here, and then the bears pushes the price down aggressively and fills the gap, and the price goes inside the body of the first candle. So we see that the price here goes inside the body of the first candle. The longer the belt hold candlestick, the stronger the pattern. Now the longer the green candle here, the stronger the pattern, and this shows that the uptrend is weakening and there is a possibility of a reversal. So we see that the uptrend is weakening and then there is a possibility of a reversal, which we see that there is a reversal immediately. The candle can be considered with other candles, just like the bullish one. It can be considered with other candles to form a pattern such as bearish engulfing pattern. So this is a bullish belt hold pattern and then bearish engulfing pattern. If you do not understand about bearish engulfing pattern, just check the last video. So other one, we see a bullish meeting line pattern. In this pattern there is two candles of opposite colors and both of them have long candles. Bullish meeting line is a bullish reversal pattern, which means it forms in the bottom following a decline, as we expect being in a downtrend. The first candle is a long red candle, which is this one, that shows selling pressure, and the next candle opens sharply in the lower prices. At first it may seem a very high selling pressure like this one. It may seem a very high selling pressure because of the long red candle and the bears feeling confident, but suddenly the bulls operate their counterattack and pushes the price up back to the previous candle. So the bulls take the market and pushes the price back to the previous price, so that the session, the price remain unchanged from the previous session's close, which shows very significant buying pressure somewhere in the bottom, which gives the possibility that a reversal may happen. The longer the green candle, here, like this one here, and it penetrates inside the body of the previous candle, and it penetrates up to the inside body of the previous candle, which is the red one. Now the stronger the pattern. That's why we are seeing that there is a trend, downtrend, and then after this bullish meeting line we get a reversal of a trend, and there's a change on direction here. The bullish kicker pattern. Here there are two long candles of opposite colors, but here the second candles open with a considerable gap in the opposite direction of the trend. Actually it opens in the opening level of the first candle. So this one was the opening level of the first candle and the close here, and this one actually opens here going upwards. So it forms in the bottom at the end of the decline or near support levels. The first candle is a long red candle that shows a selling pressure, but suddenly the bulls picks up and next candle opens at the opening price of the first candle. The selling pressure of the first candle is wiped out by opening of the next candle opening on this level here of the previous candle. So this one was the opening and it closed here, and this one opens near the close of this one going up, showing a reversal of a trend. This shows that because of many reasons there is a high buying pressure, and it gives us the signal that the downtrend is weakening and we may have a reversal. Bearish kicker pattern. It forms in the top following an advanced or near resistance level, this one here, and the first candle are long and green, which shows buying pressure, and the following candle opens in the opening of the first level of the first candle, and this gap shows a sudden selling pressure, and it actually, the price movement of the previous session is wiped out by opening of this candle, and the bears remain in control in the session and aggressively pushes the price down, and the result is a long red candle, and this pattern shows a very high selling pressure, and it gives the possibility that this uptrend may end and a reversal is possible to happen. So we see there was a buying pressure, and then there was a reversal of the trend, which we are seeing it here when it appears in a gap below the first candle here. So we see that the bearish candle appears here, and then we see a direction or a reversal of a direction. So if you have found this video valuable, please like and share. Also comment below what you want me to cover next. Do not forget to subscribe and turn on the notification bell for other valuable video tutorials like this. See you in the next lecture.